It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And what were we looking for in the Dow? What was the key ingredient? What is what makes up the core of the Chapman Wave methodology? Identifying the lowest, most obvious low bar and waiting for that leg D. At leg D, you can make other decisions, but that is your target goal. We missed it by 2 points yesterday, made it in the DIA, that is the trading vehicle, the diamonds, that went to a leg D yesterday. The NYA, New York Stock Exchange, 1860, or nearly 2,000 stocks. Boom. Leg D. You got to wait for these things. You got to be patient. Well, we were patient, and now we're looking at a couple of things. So let me just run this down. Thank you to our host for the 3 great hours we just had. This is going to be quite exciting. Why? Because as far as I'm concerned, with the dollar breaking out like that, with the euro going to lows, as one of our dinners says, do you hear the sucking sound of money leaving the euro? Been going on for 15 weeks. Yep, that's what's been happening. The Fed has said they want higher prices for stocks. At a certain point, you're going to get some kind of a pullback. We're real close to some kind of a digestive phase. We'll go through all that in a moment. But let me just show you. I'm just trying to find here. Let me just write this down. It was, what did I just type in? NDI? NBI. Okay, I'll be back with the NBI. Let me just write it down, because you don't write these things down, you forget them. Biotech. Yeah, we're going to be looking at the biotech sector as well. So we've got the E-minis up 10 at 2008.75, not at the 2011 all-time high of yesterday, but that intraday pullback yesterday. You remember that sudden slide? I kept monitoring it and saying, okay, a lot of people are going to think this is the top. This is it. This is it, folks. But there were so many signs that buyers were coming in that I felt very strongly that we were not yet prepared to go short. We possibly might go short today if certain parameters are met, but not yet. So here we are. The Dow, the E-minis, the S&P September E-minis. We'll have to change the contract soon, but right now it's still the September, doing very nicely, holding the not even holding the 9-period exponential moving average, that 1995.60 area. That didn't even get close to that. Well, I shouldn't say it didn't get close. It did go to 1997. 1995. Yeah, I guess you can say that it got close. But it was propelled. I'm going to be teaching this. Let me just go right there, because it's so important. People have been asking about the questions about my webinar. I need to make this as clear as possible. If ever there was a perfect time for a Master Trader series based on the Chapman Wave methodology, this is that core root. This is the basics of the Chapman Wave methodology. I will be going into it a little deeper. It depends on who signs up and how much they've done in terms of the Chapman Wave methodology. I'm going to be showing the concept of the lowest, most identifiable low going to at least a D. I'm going to be showing you how you can use the 9-period exponential moving average. I'm going to be showing you how you can put these things together, the 9 EMA, the MACD, the moving average convergence divergence, the slow stochastic. Just that alone. This is putting in real time as well as in fixed time the concept of using certain parameters, the simplicity of identifying each successively higher peak, and then using other techniques to embolden your trading posture, so that you can, in fact, add to your position, or you could take off your position, or you could just trade each peak and then come back again on the dip. and expect the next leg up. And as it passes the previous peak by 1 penny, you start to do things with your stop position, or it's the opposite. We're going to be looking at the short positions because there are a lot of stocks and indexes even that are setting up for the short side coming up real soon. I couldn't even, the timing for this particular webinar couldn't be more intriguing. Why? Because the inflection point will come this Friday. Tomorrow at 4 o'clock, we will know, we don't know for exactly, but we should know a great deal about whether or not certain factors are being set up that allow the market to go even higher, and I'll talk about that in a moment, or we're about to get some kind of a consolidation. I'll talk about why we've been remaining long for this period, having added to the longs over the last couple of weeks. Why? Because of the way the stochastic is held. I'm going to explain to you exactly what pertains to the confidence of being able to hold positions when certain factors are in play. This is really going to be exciting. When is it? It's a full day, 8 hours online course taking place Friday, September the 12th. Now, if you can't make it, I often have this happen when I do webinars. If people can't make that actual day, that's okay. It'll be archived. So even though it's live, and I'm almost certainly going to be going to certain charts to show you the action live. Some people like to trade from that. I like to just teach it. I don't want to get involved in looking at too many things. We want to know exactly, this is the principle involved here. We're using it to get in here. We're using it to extricate ourselves if certain things happen and they don't work out, and we use it to take profits when certain things do happen. Just going to make it real simple. So, and as a bonus, if you sign up now, you get a free month of my newsletter service, the opening call. That's a $128 value. If you're using Tiger Dollars, I tell you, this is really a huge bargain. So let me come out of this right now and go back to what we're looking at. So now you've got the E-minis having gone to a leg E. It's a peak E. If it doesn't go above 2011, this is on the futures. There's a pattern that I show my subscribers every day in my opening call. I show you the daily and the 120-minute of the E-minis, whatever contract we're looking at, and I do an explanation, but I do not give buy or sells on this. That's almost like another service which I really don't want to get involved in. I do my own trading on the E-minis. Look, the stochastic is dipping from the 95s, but it's down at 91.68. It's still very strong. The MACD is still very strong. Is this the time to short? My subscribers will know very soon whether or not we're going to be short here or not. And here's the other factor. Let me just go through it. I'm going to move this 120-minute chart down a little bit. Now let's go through all the different time factors. You've got the Dow, INDU, all-time high today. Fabulous. What did it do? It negated the peak C1, C2. So that's really easy. You see, sometimes I put the notation and there's nothing to do. You just put the notation. You don't have to make any other decisions because you're waiting for certain things to happen. And in preparation, you put your most conservative notation down. And that was peak C1, and possibly yesterday by fading by 2 points to make a new a D, we called it a C2. Now I take that away, and what can I do? Very easy. I put in the D right there. Is that the time in D to go very negative? No, this is a time where you do an assessment and you say, if certain things happen, I want to start getting some cautionary action by putting in a short or a put or whatever it is. If that doesn't take place, what I want to do is I want to be able to say, these are the factors that are still strong, and therefore we could still get a leg E. Why do I even talk about a leg E? I'll go to that in a moment. In the weekly chart, we've gone to a G/A, brand new all-time high, and that makes this V-shaped pattern very important. And this is so interesting. In July, the high was 17,151.56. In August, it was 17,153.80. So far this month is 17,161.55. That is so intriguing. You've got 3 months. Monthly charts. You know how long it takes? It's at least 21 to 23 or something trading days. And what do you have? You have a trading range that takes it just nominally higher. And not only that, the MACD is still positive, but just starting to weaken a little bit. And the stochastic still above 90% at 90.02. Month, of course, has just barely begun, so we don't want to talk about it as if it's closed, but I'm just pointing that out. And now let's show you the S&P, SPX.X. Look at this. Leg E up in the 120-minute chart. Leg D up in the daily. Leg G/A. Now, this is where you say, oh, man, this is what I'm going to be teaching you. The G says, hey, you got to be really careful here because any failure could take this down very sharply. A says the exact opposite. It says, wow, if this is only an A, you could not get to a leg D until October. If every other week there's a new peak and a new recovery high. Until then. So when I look at this, I say to myself, this is where we have all the information that we need in the daily. We have all the information that we need in the monthly. The weekly is the sandwich. It is the middle. It is what is impacted negatively, very negatively. When the daily starts to turn down very sharply, you'll see the technicals deteriorate. And then it's slow to come back. But when it comes back, it builds up tremendous momentum. So by tomorrow at 4 o'clock or Wednesday of next week, certainly the day that we do my webinar, it's going to be so informative whether or not we've made a weekly top that says, folks, this is G, and we're coming down real sharply. We're going from 2009 in the S&P cash to 1974 to test that initially. And if it breaks that, it goes down even lower. Or it says, hey, don't get too cocky around here about shorting. This says just pull back, add to your long positions. I will be making decisions like that over the coming week or so. Now, the weekly chart and the monthly chart is in leg D, still very strong, broke out of the resistance area. Nothing to talk about there. Why? Because it takes a whole month before you can make decisions about a monthly chart. And everything's going to depend on how the daily impacts the weekly, which then will impact the longer term, much longer term monthly chart. What about the QQQ series? Well, as you know, I wait for leg D. Well, we've made a peak C if there's no new high today above 100.34, and Apple impacted the QQQ series very negatively yesterday with a peak C. There's no other way I can count this. It's very unusual. If this is a peak C, we should still go to a D. Now, I shouldn't say there's no other notation. This could have been A, B, C, D, E. Actually, I'll do that as a study. Maybe tomorrow I'll write it down as a study. Put down Apple Friday, study. I'll show you the alternative wave count. We're not in it. I don't have to make any decisions about it, so it's just there in the background. But it is very important to monitor it. So back to the QQQ series. MACD is still very good. Stochastics at 93%. The weekly chart is starting to bump into tremendous resistance in this Chapman wave inside track. I'm going to teach you on Friday a week how you can take two simple trend lines and they can be so important. Look at that wedge formation that came in exactly. I'll be right back after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And because I have such a passion about teaching the Chapman Wave methodology, I'm going to talk about things in relation to what I'll be going through a week from tomorrow and how important it is. If you have a portfolio of, say, above $10,000, and it is part of what you trade or part of what you put aside, but it's really important to you in terms of not just the future, but in terms of other possibilities and in terms of having other positions in your, say you've got funds or you've got whatever it is you've got. If you're looking at this very objectively, I believe that just being able, I get emails all the time from people saying, thank you so much for keeping us on the right track for so long, for all these years, because of the Chapman Wave methodology. And I believe that the techniques that we'll be discussing and going through, you can make them as simple, you can make them as complex. I'm going to show you the simplest way of looking at your portfolio and saying, okay, this is the time to be a little bit cautious, maybe taking a little bit off, or maybe, if I can, adding to that position. And that's going to be the way I look at it. I'll take requests. We'll be looking at them live, whatever it is that you want, and we'll do it in the simplest of terms. You'll have a handout that'll go to you beforehand, and you'll be able to review as many times as you want. And the webinar is going to be archived, 8 hours archived for a month, to just go over and go over. So I'm really, look, this is without any technicals. You remember I showed you the other day, you could do the naked chart. This is the naked chart. There's nothing here. I've got a couple of trend lines in, but that's really to show other things. And what it shows you is that the 30-year T-bond yield, right now bonds are down 25-30 seconds at 138.05. That's the December contract. The dollar is up 72 cents at 83.61 as the euro just tanked after Draghi's statement. And so what we're looking at, the euro is down 17 to 1.297, and you've got crude oil is down again. Copper is staying in that 3.1 area. But let me go, and gold is trying to rally after big move to the downside. It's up 40 cents. So what you've got here is this is the 30-year, white is the 30-year T-bond yield. Gold, the yellow, brown, whatever that is the 10-year note. And the bottom one is the 5-year note. Look at this. You've got yields that went to G/C on the way down in terms of troughs. Whoops, did I miss something? No, I didn't. I just expanded it. And that went to 30.59. That's 3.059%. All of a sudden, you get a nice pop to the upside, and you've got the pop to the upside in the 10-year, and you've got the pop to the upside in the 5-year. But wait a minute. This is just back to where it's been many times before, a whole chunk of 2011, 2012, 2010. So nothing here has changed. It's the mindset, the attitude that's changed. So even more importantly, look, the 10-year note held much better than the 30-year, which took a huge move all the way from the 4 through 3.9, was it? 3.97 area down to 30. That's 10 points. That's 12% more to the downside. In other words, yields came down and bonds went up. Now what's happening is that the 5-year is just stuck in this trading range. And look how many things are tied to the 10-year and the 5-year. So this is very important. There's stability here. Let me just show you something very interesting. If I squash it, you'll see that these guys all started off together at some point back in June of 2007. And now they've been expanding out, flailing out. And what's really interesting about this particular thing is that the price is still better than it was back in 2008, was it? December of 2008, the yield went down to 2.7, and the recent low was 3.0. So you can see that yields do mean something. It's the basic trend that's going to be very important. So I want you to show that. Now the next thing that I want to show you is that in the bonds themselves, the daily, the December daily, made a silent doji. This is a very interesting technique. I'm going to talk about this in my upcoming webinar. How we treat certain candles, in this case doji candles, either doji just before, just on, or just after a particular reversal, up or down. And in this case, bonds made a high of 140 and 16.30 seconds on the 28th of August. It went the next day to 140 and 15.30 seconds as a high. That makes a peak. 1 penny or 1 tick makes a difference. And what happened is you got a silent doji a signal that says be careful, because if the next session is a sharp move up or down, that is a trend you got to follow at least for a little while. And lo and behold, zoop, it goes right below the 9-period exponential moving average, trading right now almost at yesterday's low of 138. Today's low is 138 and 230 seconds, trading at this particular point at 138 and 830 seconds. So on a 120-minute basis, that was merely a pop and a drop. So I'm going to be watching this real closely, but it looks right on the shorter term that bond yields have turned down. That makes things very interesting. I'll be back straight after this message.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I just want to clarify a couple of things. When we're looking at bonds, what I'm looking at is that the daily, both in the continuous contract and the December contract, has made some kind of reversal pattern. But it's really the weekly that I'm spending time on, the weekly in the continuous. Now, I know some people, when you're trading, I wouldn't use a continuous contract if I was trading. I treat it as something that is very important, but because it gets smoothed out, it doesn't quite have the same veracity as an actual chart that is being traded. However, the way I'm looking at this weekly chart, if this is not peak F/B, but it really is a peak F, and I haven't got that sign yet, but if bonds start to trade under 136, here's my question. The stock market went up together with bonds. Is there actually a chance now that we're going to get bonds pulling back with the stock market, or money comes out of the safety of bonds and goes into the so-called safety of stocks. Those are decisions that I'll be making for my subscribers over the next couple of weeks. Next couple of days. We don't have weeks here. And most importantly, yes, there's an island reversal in the TLT, but that's just because it trades only in market hours. And it's like a currency in that it trades overseas all the time. In fact, it's a huge market, the bond market. And so in the TLT, you will get that gap. It's an island reversal. You can get island reversals many times. You get these island reversals. It is particularly significant here if, in fact, these two doji tops in the TLT back on the 28th, with a high of 119.37, next day a high of 119.43. If those become, it becomes a top because the price goes underneath the TLT, starts to sink under 114.50, and right now it's at 116.18, down $1.20. We're going to be watching this real closely. So here are the couple of things that I'm looking at. I had some questions, and I think I want to deal with those questions because I didn't quite finish them yesterday. I just can't remember who it was that sent me a statement saying, in terms of my looking at certain aspects of the market, socioeconomically, politically, not just technically, what would I be looking at and why? They know what I'm looking at. So someone sent me something to say that in Manhattan, I think it's Nordstrom is going to build the world's tallest combination of apartments and a mixed-use building. Isn't that interesting? And Nordstrom of all, come on, Nordstrom, you know, if it was Macy's, an international name. But Nordstrom, well, I guess it's international, but it isn't international, like a Macy's. So the next thing was, I did this yesterday. I spoke about Goldman Sachs and a question about Goldman Sachs and the XLF. And the XLF right now is still doing very nicely, and it's in leg C. I think it will go to a D. That's the way I'm thinking right now. We happen to be long in, for my subscribers. Then Julie said, and it's a really good thing, the XAL, how's that being impacted by the lower oil? Well, the question is, XAL is the Eiffel Tower reversal pattern top in. Well, I can't talk about a reversal pattern with the Eiffel Tower on anything other than the monthly chart, but the daily has gone to that leg D. Remember, we were in my webinar coming up a week. I'm gonna make a big deal out of this. I love teaching it. I believe that from the letters and emails I get afterwards from folks that they really get something out of it. I'm making a big deal out of this being the period where we're looking for Ds and to see what happens in daily charts and then weekly charts and then monthly charts. And what's happened is you've gone in the XAL, the airline index, from the low bar, in this case, the low, well, it's been recycling a number of times from peak D, a number of peak Ds, then you recycle the latest recycle was the low of the week of the 5th of April at 51 round number low. And what is it? It goes ABCD, has a quick squeak to an instant restart, or it could be an E/A, but I called it an instant restart, ABCD. Then it goes to an E top at 88.67 in the weekly chart, and that occurred the week of the 13th of June, pulls back in a sideways consolidation. This is the most potent of all the high-level consolidations. Is there a Chapman wave drop bucket formation? What is a drop bucket formation? It is a double top, like the inverted lowercase h. Let me just go to this right here. This Chapman wave methodology CD book. Available at TFNN, and I want to go to chapter 22. Chapter 22 shows you right here, this is the technique that we use, this double top technique right there. Slide 368. I will go through these different patterns over and over in this webinar, and you will be getting my attention for 1 month after that. You can ask me any question anytime. I'll be answering. Usually I do in any case, but this is especially for those people who are attendees to the all-day workshop. And look at this. That's the technique. And what do you look for? Why do you look for some kind of a top there? Why do you look for the potential to break out, start a brand new buy mode or a reversal pattern? And there are certain clues that you can look for. Well, crude oil says that the XAL should go higher because the airlines are definitely benefiting huge from lower crude oil. Well, unless we find out in another 2 months' time that they leveraged themselves in order to, a month or 2 or 3 ago, in order to lock in the price, and now they locked in at the higher price, we will find out which airlines have made that mistake. It happens. So we're going to be watching this real closely. You've got yourself a top at 88.67, and all of a sudden, yesterday was it today? Today, you break to leg D in the daily, and you go to 88.98. It's only 31 cents higher than the all-time high maybe previously. But look what it does to the monthly chart. It makes a G/C. And I have to tell you, Gs in monthly charts are very unusual. And that says we could see higher prices coming out in 2014 in the airline index. Isn't that interesting? So I'll be making some decision. Now, as far as the Eiffel Tower is concerned, we have no sign yet of an Eiffel Tower. That's where you go straight up and then straight down. Usually it's a leg A, but it could just be an extension of a move that doesn't have any lower high bars for 12 or 14 sessions. Could be 12 or 14 months. Could even be longer. And then you do. And when that happens, it comes down very sharply. Nothing technically wrong here. Just one clue says this is something that you have to watch for, but there's no sign yet in the XAL monthly chart. The daily and the weekly are going to be the clues. So I don't have anything yet. So Julie, answer is no. Next thing is Lou sent an email saying, "Hi Basil, thinking of Euro put October 129 and the 30-year 134 put. What do you think?" I just didn't have too much of a chance to give me one level to watch on the Euro, but I haven't been able to answer, so I'll answer it right now. This is going to be the big question going into early next week. Has, in fact, there been a change in trend in bonds that says, regardless of whether we come down in bonds, yields are going to go higher right now, which is going to impact the housing sector, number one. And the big question will be the parallel question, an even more important question will be, because the market went up with bonds, is the market going to come down with bonds, or will money flow from the safety, as I say, of bonds? I love the word safety. Safety of bonds to the safety, I love the word safety, safety of stocks. When I look at these different indices, etc., yes, you could get this rotational aspect that says there are enough stocks that could rally here that would really help the stock market. Not to go that much higher, but to go high enough to really do a short squeeze on everyone. Or we're looking at very important stocks that are starting to show signs of wear and tear, and they're really struggling at this particular level. So now let me go back. There's another two questions. Yeah, subprime. I was reading this in the Boston Globe today, and then Frank sent me an email just beautifully. I just came back to the office, up the stairs, that is, from reading the Boston Globe business section, where they were talking about how the auto loans are they're just dishing out these auto loans. It's just an incredible thing that all the parameters, the safety aspects are just not there. They're just dishing out these loans to anyone. And they've extended them now from 3 years to 5 and even 7 years. That's a big deal. People think they're getting a great bargain. Let me tell you, when you finish with all the interest and everything, that is not a deal at all. It makes it more convenient to pay every month, but it's not a big deal. It's not a good deal. So Frank sent this, and it's the same thing. He says, bankingmyway.com credit. Anyway, so there's an article on auto loans keep getting longer, and it's about credit. And in fact, don't forget about this aspect of the auto industry fueling sales. No, I have not forgotten about that fact at all. So it's a very important component of my looking at the markets for some major top, and I don't think it's there yet. So that was the XAL. Next question I had was, I did the bonds, and I'm just going to scan here quickly. Oh, there it is. How many years more can SPX bull market go on for? Several years or close to a 99 or 2000 type top? Is 87 crash possible? That is a great question. I go through this with someone that I compare notes with every couple of weeks. We go through this whole thing. He's an Elliott waiver, and I, of course, am not an Elliott waiver. But I have to tell you, when I'm looking at the socioeconomic aspect, I have no. There is nothing in the back of my head where I store all this information. There is nothing there that says that we haven't got all the parameters setting in place for a pretty major top at some point. And that includes skyscrapers. That includes excess. I talk about excessivity all the time. That includes, then Angie says, finally have all 4 cars paid for. Last payment of 2 of them this month. Phew. I like that. Good. Yeah, I think cash is going to be a very good place to be at some point, fairly soon. But fairly soon, meaning I'm talking about in the longer term aspect. That's not any day now. I don't think that any market top now will be the same as if there's a market top with the Dow going into the 19 or 20,000 area. That will set the stage for a market top of significance. Larry spoke yesterday about how long it took. You know that the Empire State, the papers were signed August of 1929. I've done a whole show on this. In fact, I've done a webinar that included Goldman Sachs and the Empire State, and Rockefeller sent a whole bunch of things from the 1929s. And what you've got to come away with is that when any person who's looking after funds, or any person that talks about how the market has just gone up forever, it never goes down for more than a short while, should have been there in 1929. Because in 1929, when the Empire State Building papers were signed, it took from 1929, 1930, I think it was in 18 months they finished the building. It was the shortest time period. My impression is one of the most well-built buildings ever. A plane's gone into it, nothing happened. This is why? Because the depression started almost immediately. Within months, we were talking depression. And even with the huge rally that occurred just soon after October, November, when that second phase to the downside went to lower lows, it was all over. But you know that it took until 1951 before the Empire, it was the quickest building when it opened. It was called the Empty State Building. It took until 1951, or was it 1953, before they made 1 penny of profit before it came back. And that was the same with the stock market. So don't believe this nonsense that stocks go up forever. There is a period where they will not go up. And I think capitalism is under huge pressure, intense pressure. And I would not be surprised if capitalism goes out of favor. You haven't heard anybody talking about that. But if capitalism goes out of favor, and it goes out of favor for a couple of decades, that'll be something. Anyway, right now, things are looking up. We made a new high in the Dow today. And I want to just in terms of real estate, in terms of things I haven't even thought of for a long time, whether it is roller coasters. I did that whole study, if anyone, no, you weren't here. But in 2000, going into the top in 2000, I was doing the study on roller coasters and those huge mega ships that were being built. I called them, in fact, in my article that was published in The Psychology of Investing, I talk about 4,000 seat or passenger ships going to nowhere. I mean, just going to nowhere. They were just there for a hotel on wheels. That's all, a city on wheels. Sorry, wasn't on wheels. It was on the water. So let's get back to the markets. In fact, I like getting diverted for this sort of thing. But let's go to the IWM. The IWM right now is at a peak E, if there's no new high. That W formation, I call it the soft W formation. These are the patterns I'm going to talk about in the webinar come a week from Friday. What I'm going to be doing is I'm going to be showing you chart patterns that repeat, and you don't even have to know the waveform. You just have to know the pattern. I'll be right back after these messages. Basil Chapman, Dow's up 40, S&P's up 5 this 4th day of September.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks, we're back. So the IW, I'm going to get back to the market. I'm going to just, I need to talk about two things that are really, really important as far as I'm concerned. For a bear phase to set in, doesn't matter whether it's a daily, doesn't matter whether it's a weekly, doesn't matter whether it's a monthly, you have to see the volatility index, the selling pressure rise. In other words, the volatility index has to start going into the mid-teens and then into the 20s and stay there, number one. And number two, you have to have bad news. And what is bad news? Bad news is anything that impacts the market negatively. even if it's good news and it impacts the market negatively, that turns out to be bad news. And we haven't had anything like that yet. And as soon as we get it and it holds, you'll see all these different indices start to tank. So let's go through the numbers. It's very important. I'm going to do gold first because the dollar has screamed to the upside. Gold, trying to have a rally, got hit by the 9-period moving average at 12.78. It's repelled. It's down now. It's down 50 cents. After 3 days ago, it had a smash to the downside. This is breaking the support level of the of the weekly chart, and that's kind of important. But most importantly, let me just go back to this chart. This is what I'm going to teach at my webinar. These patterns, remember, it was over a year ago that I drew this in. The H pattern goes to lowercase h goes to lowercase m. The lowercase m can continue for a while. It can even make a larger arch, but a test of the low is going to be really important. In this case, it's a test of the low of 100. We've already gone lower to 114.46, but the whole 114 area is going to be absolutely critical. Will gold, the GLD, get there? Well, this chart pattern says it depends. If it takes out 119.42, closes under that, the low of the 6th of June, yes, it will go lower. At any point, if there's a decent rally in the GLD, it needs very quickly to break and close above 129.21. That was the high of the 11th of July. In the meantime, the dollar, and I've been saying this for a while, the dollar's had its first really strong breakout of all that resistance in the 81 area. Finally, the index is at 83.59, trying to tackle the 84.75 high of a year ago, more than a year ago, the week of the 12th of July. That's 84.75. And you've made this H pattern. Oh, look, this is exactly what I was talking about. The H pattern, there it is, the lowercase h. There it is. Let me just draw it in correctly. There's one. There's another. And then it breaks down. And what does it do? It tries to test the left side low. And what is the left side low in this case? Right there. It makes yet another one. And that is 79 was the round number low made in the index on the week of the 25th of October of 2013. There's another low that went to 78.92 back in the February of 2013. What does gold do? It goes back down, and as it's doing that, you've got a rising stochastic, a rising MACD. It goes above the 9-period moving average. It challenges yet again the 200-period exponential moving average, which is around about 80.50, breaks out, and now you've got leg C in the weekly chart, which should theoretically go to a D. So the dollar is still very strong. And look at this daily going to a very extended leg E in this pattern I spoke about yesterday, which could turn into a fulcrum, which it's done. So that's the dollar index, getting close to some kind of a digestive phase. So let me go to the VIX once again. And as I say in my opening call, we are still only long. We're trying to set up some shorts. We got something in place today which hasn't been hit. I don't think it's going to be hit, but if it's hit, that's one thing. If tomorrow, Friday, the VIX index holds above 1150, it's at 12.07 right now. If it holds above that, that will start to say, hey, be careful, because the weekly chart is starting to make higher highs and maybe higher lows. We'll see, because last week's low of 1124 has turned out to be the low so far up until today. So we're going to be watching things really closely. This is a very important period. That's why I wanted to have this course. A week from tomorrow. Check it out on the front page of TFNN. I'll be back. Stay tuned.